What does work? What is a true barometer of the next 6 to 9 months, which I regard as a classic investment horizon? Well, in the last few days, we've gotten a windfall here. We've heard from all of the major shopping-related real estate investment trusts, the REITs. Now, these companies have a lot on the line. They and their tenants need to make not short-term commitments based on COVID, okay, but longer-term commitments based on everything. And these companies are telling us that they are going pedal to the metal right now in terms of signups. It's one of the best environments in history for retail real estate. From Kimco for strip malls, Tanger for factory outlets, Simon Properties for malls, Federal Realty for shopping center. Well, it's all good. As a matter of fact, Federal Realty, the kingpin of shopping centers, just reported this very evening and gave you another fantastic beat and real big raise. CEO Don Wood noted, quote, "Our team delivered an outstanding quarter, exceeding all of our internal forecasts," end quote. And when I looked at those numbers tonight, I was saying, wow, things are good. When we heard from Simon Properties on Monday, that's the largest mall company, CEO David Simon explained that, quote, "Total sales for the month of June equal to June of 2019 and up 80% compared to last year. Occupancy is at 91.8%. That's an increase of 100 basis points compared to the first quarter," end quote. Simon said his properties continue to see demand for space from healthy local, regional, and national tenants, entrepreneurs, restaurateurs, mixed-use demand ever so increasing day by day. How about Kimco? Yes, the strip mall company, which at one point was supposed to be in real trouble from the pandemic, incredible demand. They told us that anchor occupancy finished the quarter at 96.9%, up 70 basis points, the largest quarterly gain they've ever seen since they started collecting that data 10 years ago. Kimco is seeing record leasing activities with new vacancies at a 5-year low. They specifically highlighted the strength of off-price furniture, home goods, pet supply, hobby, health, wellness. When Tanger, the outlet company, reported yesterday, they felt compelled to dramatically raise their guidance. Again, you don't bump the full-year forecast unless you're feeling confident. The most calming and reassuring words came from, of all people, David Simon, who's hardly a calming and reassuring person. He said that even in the areas hardest hit by the Delta variant, where he has malls, like Missouri, like Florida, there's been no slowdown whatsoever. No COVID. He checked with the people who run his Battlefield Mall in Springfield, Missouri, before the call, as well as with Florida malls. They're all doing fine. He's sanguine about what Delta means for the economy. Yeah, not much. More than half the country is now vaccinated. When it comes to mask mandates, we already know the drill. And that's why Simon declared a $1.50 distribution for the third quarter, up 7.1% versus the previous payout. By the way, over 15% from last year. To me, these retail REIT numbers tell you two things. First, the Delta variant may be infecting people at an alarming rate, including so-called breakthroughs who can be asymptomatic spreaders. You and I both know them. But it probably won't hit the overall economy as hard as you might expect, given how worried you might be about getting sick. Second, things are going to get better, maybe much better, by this time next year. We know that because nobody's signing 5 or 6 month leases, right? They're signing up for the duration. Given the breadth of different retailers these REITs deal with, it's encouraging that they all seem so positive about this next year right now. Here's the bottom line. When so many different kinds of retailers are predicting a healthy consumer environment that's getting stronger, not weaker by the day, the week, the month, and the year, who are we to say they're all wrong? I know these COVID numbers are scary. They scare me. But the people who take the virus seriously are already immunized, and the people who don't take it seriously won't change their behavior, even in the middle of a serious outbreak, which means the economy should end up being fine.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.